Hi, welcome back to my YouTube channel. This is Abhishek Chaudhary, and today we will be doing a company analysis of a company which is a market leader which holds 82% of market share in the industry. And I'll tell you a very interesting thing about this company. The current price of this company is 13,500, and if I tell you that if you can invest in this company and the share price will definitely go to 26,000 or 30,000 in the coming few years. So will you invest in this company? So just think about it. Probably you would be thinking that 13,500, it's a very expensive company, and let me tell you, 13,000, this company is very cheap. The value of this company right now is very less. And if I compare this company with Adani Enterprise, whose share price is 2,500 right now, and Adani Enterprise, I could say that it's very expensive than this 13,000 rupees company. So you'll be thinking, how is this possible? So today I'll be doing this company analysis of this company called ZF Commercial Vehicle Control System India Limited, which is the monopoly in the industry. And let's get started. So the company is ZF Commercial Vehicle Control System India Limited. We can see the tagline, acting on next generation mobility now. From the tagline, we can tell that it is connected to mobility, cars, commercial vehicles, or getting the technology in the mobility sector. So the company is a part of commercial vehicle solution division of the ZF group. And if we look at the what the company does is ZF commercial vehicle in India, it is operated under ZF Wabco brand. So the ZF brand is a global brand. We can see on the website of ZF that ZF is a global technology company supplying systems for passenger vehicles, as commercial vehicles and industrial technology enabling the next generation mobility. So what it does is actually provide next generation technology to commercial cars or commercial trucks, to all the mobility vehicles. And it's a very popular brand whose headquarters are in Germany, and ZF allows people to see, think, and act. And what ZF brand actually does is it works on four technology domains, which is vehicle motion control, integrated safety, automated driving, and electric mobility. As we can see that government is all the countries are pushing towards electric vehicles like cars and trucks to move away from the fossil fuels and get into the electric vehicles. And this ZF actually promotes the technology of electric vehicles, whether in terms of uh, driving safety or other installed sensors, cameras. So it provides technology to this. And what ZF has collaborated with Wabco India. It has collaborated with Wabco India brand, which is India's market leader for advanced braking system, conventional braking products. It provides conventional braking products and related air assisted technologies systems in India. And as it has collaborated with our Wabco brand, it has, the company has 82% market share in this industry, in advanced braking system industry. What the company would do in the future is provide braking assistance to the commercial vehicles and provide other safety technologies like uh, other ADAS, provide other technologies like ADAS, and it would provide ESC, electronic safety control system. And ADAS is advanced driver assistance system. And these are the products which company provides. And As we can see that it has collaborated with Wabco India in January 1, 2022. The CVS division will significantly provide advanced solutions for safe and sustainable. There would be more of governments, um, more of government support in this industry, and there's a very good chance that the this ZF Wabco brand would emerge and grow significantly in the coming future. As the company also provides after sale service to its customers, and it also makes spare parts which which gives like 13% of the revenue which will be seeing in the after slides, and air braking and safety products 82% in financial year 2022. The revenue from the air braking and safety products was 82%, and by 2030 the company projected revenue growth of $1 billion, 8,900 crores. Now the revenue of the company is close to, I guess, 3300 CR, which would close to double. So there is a very good chance that the current market price of the share is close to 13,500. It would obviously double by 2030. That's the plan, and there are uh, very good chances that the price would double before this 2030. And experts group the five core technologies that will shape the future for mobility market under the acronym CASES. CASES is connected, autonomous, shared, electric, and sustainable. Now, as there is a growth of more of electric EV vehicles, there would be more of technology development in terms of mobility and in terms of braking system and sensors, cameras, which which the company ZF provides. And ZF is a global brand which you know um, which is known for all of these technologies and making of these mobility technologies and shared electric. And the company is very much into sustainable development. It cares about what they are doing and being sustainable. And one thing I wanted to point out is I'll provide you with this presentation. You can read all this. I would not bore you with the presentation. I would point out the main points, and you can go through all the presentation. So penetration of the ZF brand into the Indian industry is mainly on electric stability control, advanced driver assistance systems ADS, reverse parking assistance system which is RPAS, driver behavior monitoring system. As there has been many accidents in the country, so there would be more of pushing towards more of uh, technological systems like electronic stability is there and reverse parking. And we have seen that more of companies like Benz or Volvo are moving towards automation parking, and the company provides this technology. And it also tracks the driver behavior monitoring system, which would limit the chances of accidents, and it would keep a record of the behavior patterns of the driver, which would give you a more data analytics of when there are accidents and how to prevent them. Introduction of new product portfolio, doors with door control system, air suspension systems, air disc brakes, and among others. These are the products the company uh, provides, and electronic braking system. This is what I was talking about, the automated braking system during emergency situations. Now, as there is more growth of EV, the company would grow as it provides all the technological factors which required in EV segments. And you could read all this. This is more of detailed analysis what the company do, what are the products it provides, and it mostly target the buses, trucks, and heavy trucks which would see which carries the goods like fleet. It targets those segment vehicles which provides the technology which would benefit the companies who are into the transport business. So as the company, as the future of EV grows, the company would perform very well. Other applications. So the company main clients are from railway, aerospace, marine, defenses, uh, armored vehicles, a strong local mechanical design application engineering team of OEMs. Now the company employs, now the current people working are close to 15,000 people working in ZF brand in India. The global ZF brand is also known for this electric mobility, autonomous driving, vehicle motion control, electronics, embedded software, mechanical engineering. We know that the ZF brand is a very global brand which is very much into technology. Those experience come to the Wabco brand which has collaborated, which would benefit the company as a whole. And if you look at the revenue structure, product wise, revenue is the most of the revenue is from air braking actuation systems contribute 78% of the revenue, which is this is data is again from financial year 22. And the spare parts which it provides is contributes 13% of the revenue. Services, software, research, development, business support, this consists of 8% of its revenue. And if you look at the revenue geographical wise, 54% of the revenue is from domestic sales in India, and of which was in financial year 17, the domestic revenue was 70%, and it has decreased to 54%, which says that the company is targeting the international sales. As you can see, international sales 46% is from international in this financial year. And the company is it is global brand. As we know that ZF is a global brand, it it gets the clients from globally, which benefit the overall company. As you can see, the international sales are higher than domestic sales. Let's look at the financials of the company. And the current market price you can see is 13,500, close to 13,500, 483, and market capitalization is 25,563. These figures tell the whole thing about the company. The current market price is 13,500, and the market cap is 25,500. There's a huge this if you look at companies like if you look at ITC, the market current market price is 400, and whereas the market capitalization is very high. There is very very huge gap between uh, market price and market capitalization. We don't see any huge gap between these two, which says that the value of the company is not high. There is a very potential high growth for the company, and the high has gone to high price is 14,000, and lowest was 8,500. The PE ratio of the company is 72, and Uh, the book value of the company is 1270. The book value, it means that if the company is bankrupt, or uh, if the company is sold today, the value of the assets would be 1270, and return ROCE, return on capital employed, is 19%, and return on equity is close to 14%. And what actually I want to point out is ROCE is very good. Having ROCE of close to 20% is really nice. Close to 20% or above is, which says that the company is really performing very well. And return on equity is close to 14%, which is good. and and there is no pledge percentage of any equity. Price to book value is 10.6. Price to sales, which means that for every 1 rupee of sale, we are paying close to 7 rupees for the company. And EPS is 187. And I'll tell you a very good way to find out that the company is overvalued or not. Just we need to come to the screener website and look at this PE ratio chart. This will tell you, it will give you a very good idea that the company is performing well, is overvalued or undervalued. If you look at If you look at the P ratio, the P ratio was highest on August 2020, which was 180, which says that the company was highest valued at that time. At that time, the P ratio was close to 38. And if we look at after after 20 on September 21, the P ratio was 84, EPS was 82. If we look at right now, the earning per share is 187, which is the highest from for all time. Highest, the EPS has never been 187. This is that the company's earnings are very high and they are peaked right now, which says that the company will is growing and the earnings are grown from year to year. And P ratio is 72. And if you look at the recent COVID levels, it has the price of the share right now is below the recent COVID levels. It has never been to this level. In sense, in sense of P ratio, the 72 P ratio has never been for the company, which says that the company is undervalued and earnings are very high. EPS is very high, which provides, it gives the insight that the company would grow, and company is growing, and there is more potential growth for the company. And if you look at the sales revenue of the company, revenue this quarter was 961, uh, just below, somewhat below the last quarter. And profit before tax is the same. And if you look at the year on year growth from June 22 to June 23, the the revenue has grown 20% from year to year. And profit before tax in June was 86 and it has grown to 134, which is a growth of 56%, right? Which is fine, not very high, but these financials are fine. And if you look at the profit and loss statement from year to year, if you compare the revenue from 22 to 23, the revenue has grown close to 35%, which is which is good, not very high. But one thing I actually want to point out is the profit before tax. Profit before tax has grown from 22 to 23. The profit has grown to 118%, which is really good, very high. It says that the company's profits are growing and pro- company is performing good, profits are really high. We can see that every quarter, the revenue has grown. There is a constant growth in the revenue every quarter, and there is a constant growth of net profit before tax. And one more thing I actually want to point out is the borrowings is zero. There's no borrowings. There is some liabilities which is 611 cr, 600 cr, and share capital is 9 cr, and reserves reserves are growing, which says the company is building assets and growing, growing in terms of assets. And fixed assets are fine, but reserves are very high. It says there are assets for the company, and work in progress has also increased in March 23 year. From March 22 to 23, it has increased. And investment, there was some investment, and which says that I think they have sold some of their investments and cleared their investments proceeds. And there are other assets are also increasing. And one more thing I want to point out is the promoters equity ratio is 75%, and public has 7.58% of the equity, which says that if in the future the promoter wants to raise some money uh, with regards of equity, there would be no problem, as there is plenty of equity with the promoters of ZF and WEPCO group. If you look at the employees, ZF group globally has close to 1,65,000 of worldwide employees, and these are the sales numbers of the ZF group, which is really impressive. And the company operates 168 production locations in 32 countries. And this ZF group has combined with the WAPCO group India, and they are working together towards building more technology, next generation mobility technology towards the vehicle safety. This year the ZF group has participated in the E Formula racing business, which would give more opportunities for the innovation and technology in the cars vehicle racing business, which is the Formula E, which would give opportunities and business for the company, which would uh, make the company grow financially. We can see that there has been a very steep rally from the COVID levels. It has grown very steeply, right? And if we look at from COVID levels till now, the price has increased close to 187%, which is 8,790 points, which is a very steep growth. Now the price has grown very steeply, so it is no point buying right now. We should have bought at this levels when it has made a very it has made a new high. At this level there was sense making purchasing, or we could have bought or in on this level uh, at 10 close to 10,900 when it has broken this recent highs. Now we need to wait after the price gives a pullback to this same 10,900 levels, and you could see a future rally after that. I am definitely bullish on this stock, as the company is uh, growing from quarter to quarter, and there is future opportunities in terms of commercial vehicles, and it is the it is the major market monopoly company which provides the which provides the braking system, intelligent braking system for the safety of cars, safety for the cars. We could see the ZF group would grow to certain heights, as we could see the market cap is very low in terms of current market price. There is a rally left, and there is more price left in the stock, which would could take the stock price to close to 30,000, which is expected in 2 to 3 years, 2 years maximum. The stock would rally. And thank you for watching, and please like, share and comment, and subscribe to my YouTube channel, and please mention in the comments if you would like me to do analysis on certain company. And that's it for today. Thank you for watching. See you. Bye.